Alright, thank you guys so much for tuning into today's video. And today I do want to be recapping over when is a fair value gap valid, right? So what makes a fair value gap a, I guess, a suitable fair value gap? Well, the first thing I do want to go over is what is a fair value gap in the first place, right? So a fair value gap is a 3-candle pattern. So it's going to be, this is how a fair value gap is created, right? So there's a the initial candle. And let's just say that this is bullish conditions. There's that candle there, and there's another one, let's say here, let's go with this, so like this, and there's another. So it's always going to be created with 3 candles. And a fair value gap is going to be a gap between the third candle's low and the first candle's high in bullish conditions. So this right here, so let me make this green here just so it's a little bit easier to see. So this is a busy, right? This is a fair value gap right here. That's your fair value gap. Right, it's a gap in price between, this is the first candle. So let me denote this as first candle. And this is the third candle. So pay attention to how the first candle's high here doesn't overlap with the third candle's low, right? There's an inefficiency here, and this is what makes a fair value gap a fair value gap. And same thing, and you can reverse this for a, I guess, a SIBI, but this is essentially what a fair value gap is. So there's 1 candle, 2 candle, 3 candle. It's a 3-candle pattern. That's what a fair value gap is. And a fair value gap indicates that there is an inefficiency in prices, right? So we inefficiently delivered this right here. So efficient delivery would have been something like this, where we traded down into the first fair value gap's high, right? Leaving no gap in between. But because there's this gap here between the prices, this leaves behind a inefficiency. And what is that inefficiency what does it tell us? It indicates that there's been some sort of displacement, right? Some sort of willingness in the markets to reach a specific level. So I always associate fair value gaps with displacement, right? And imagine displacement as a scenario where a elephant is being dropped into a kid-sized pool, right? The water that's within the kid-sized pool is going to be displaced. It's going to seek some sort of being to hold its to contain it, right? That's like, think about it, kind of trying to visualize what would happen if an elephant gets dropped into a pool. The water is going to, like, it's literally going to erupt, and it's going to seek some sort of containment. Understand now, the water in this scenario is prices. Prices is seeking something, right? And what is it seeking? It's seeking liquidity. And that's essentially what a fair value gap indicates, right? It indicates that there's there's strength in the markets, and we are trying to reach towards something in the markets. So that's kind of the story and my understanding of a fair value gap, right? All right, and so not every single fair value gap is valid, right? Not every single fair value gap is going to help you with bias, and the best way to understand when a fair value gap is valid or not is understanding where prices wants to go. So the best way to understand that is, do you know what the narrative is in the market, right? So narrative is the secret sauce that makes a fair value gap valid or not. So in this, like today, we had this bullish inefficiency here, right, on the 15-minute time frame. And people might think of this as a inefficiency that should be respected, right? So why did this 15-minute fair value gap become or ended up getting inversed? Well, the narrative coming into the day was for us to take out the daily low. So take a look at this daily candle here, right? This daily candle, it's a bearish daily candle. It's indicating to us, and it's giving us this idea that we're most likely going to take out the daily low. So the daily objective, my higher time frame, I guess, order flow, would for us to take out the daily low, right? So why is this 15-minute fair value gap? Why it shouldn't be respected, and these are the cases where these inefficiencies, right, do get disrespected. It's because of narrative. If you know where prices wants to go, then you would understand when a fair value gap is going to be valid or not, right? And in this case, this is the reason why, right? I know prices shouldn't respect this inefficiency if we're going to respect the daily time frame. And these things occur on almost every it actually occurs on every single time frame, right? And to go over some, I guess, trades, I do want to give you guys a background of what narrative is. So narrative is the understanding of where prices wants to go, and it will help you determine if a fair value gap is valid or not, right? If you know prices are seeking, like in this case right here, right, based off the daily time frame, if we know that prices is seeking lower prices, why are we looking for a bullish fair value gap? We're going to look for bearish fair value gaps to support the idea of bearish order flow. So like in this case here, because I want to see prices take out previous day low, this 4-hour fair value gap here, it's understandable that we should respect this inefficiency, right? We should feel this inefficiency. It doesn't matter how much we fill it in. At least as long as we get into it, we trade up into here, we rebalance it, and then we take out the daily low. That's when you know when a fair value gap is going to be valid or not, right? So in all of these, in this entire time frame right here, right, in all of this consolidation, we shouldn't be looking for any bullish fair value gaps because we know the narrative is lower prices. And I have two narratives or two order flows that I tend to trade with. So right, is the first question is, are we seeking liquidity? If we're seeking, like today, the daily time frame, the daily low, that would be seeking liquidity. And second, are we seeking discount and premium? So coming into this week, we actually just completed it. So coming into this week, I actually wanted to see us retrace back into the discount of this dealing range, right? So this is a weekly dealing range here. And notice how prices traded into the discount of this dealing range. That's equilibrium model, right? That's another reason why prices continues lower. So you want to ask yourself, what is the current objectives in the markets? If you can answer that question, then selecting the right fair value gap, it should be very, very easy. Look for the objective. If you have a clear objective, only look for fair value gaps that support the idea. And if the objective has already been completed, there's no need for you to force a trade. Just sit on the sidelines, and yeah. So to go over some examples here with you guys, I do want to go and look at this here. So there's this daily range here, right? From swing high to swing low. Equilibrium of this trade here is this 0.5 level, right? So anything above this 50% here is premium. Anything below is considered discount. The higher time frame objective for me here in this specific trade is for us to take out this 30-minute candle's high. So I notice how this 30-minute candle is suggesting higher prices. I want to see us take out the 30-minute candle's high. And how am I going to align myself with that? Well, if this 30-minute candle here is telling me that the next 30 minutes we should be bullish, that means there should be it's a valid reason for us to respect this inefficiency here, right? This 30-minute fair value gap should be respected if we're going to follow and align ourselves with this 30-minute order flow. And so going into the model here, so my higher time frame objective, the 30-minute high. My model based on this 15-minute candle here. So this 15-minute candle here supports the idea of higher prices. I want to see us take out the 15-minute candle's high. After we take out the 15-minute candle's high, we should expand higher towards the 30-minute high. And where's my fair value gap? So notice how in all of this, like, move down lower here, this move lower, I'm not looking for a bearish fair value gap. I'm only looking for a specific fair value gap that supports the idea of higher prices. And there's an inefficiency right there. So from the first candle's high to the third candle's low, there's a gap. Prices trades into that gap. We respect it. We take out the 15-minute high, 30-minute high, and expand higher towards the discount or the premium of this specific dealing range. So understanding narrative is the key to understanding when a fair value gap is going to be respected or not, right? If we're in bullish conditions, look for bullish fair value gaps. If we're in bearish conditions, look for bearish fair value gaps. And example 3, okay, they should be labeled example 2. So in example 2, we have a discount or a equilibrium model here, right? So on the 2-hour time frame here, my objective is for us to retrace back into the premium of this dealing range, right? It's suggesting to me that we're most likely going to retrace back into the premium, so that's my higher time frame objective. How I'm going to align myself with that time frame or objective is based off of the 15-minute candle, 30-minute candle, and hourly candle, and actually the 2-hour candle as well. So this 2-hour candle here becomes my model. Higher time frame objective is the 2-hour retracement back into premium. So now that I have a model, I have a higher time frame objective, all I need is a fair value gap. When is that fair value gap going to be valid, right? A 5-minute fair value gap here. This fair value gap should be treated as a gap that gets rebalanced and supports us higher. We trade into this inefficiency, take out the 15-minute high. After we take out the 15-minute high, we do end up taking out the premium of the dealing range as well. So that's a scenario so those two scenarios there are when prices should respect the inefficiency, right? Like I said, the key to understanding when a fair value gap is going to be respected is understanding narrative. Narrative is the secret sauce here in this case. And with that, that's going to wrap it up for my video for today. Thank you guys so much for watching, and until next time, be safe.